So what you're looking at is the Dow trend scanner. Now, if you haven't used it before, it's based on the Dow theory, and the Dow theory simply states that if you're making a series of higher highs and higher lows, the trend is up. And if it's a series of lower highs and lower lows, the trend is down. Now, we can do this on different bases, the bars, the lines, and we've actually used the line chart as a basis for deciding whether the trend is up or down. And so what happened today, if you look at the Nifty trend from here, very, very short term, you were making a series of higher highs and higher lows. So it was green. And today we've got a red, which simply means that we closed below the previous swing low, right? The previous time that you actually closed higher. And when you break the previous low on a closing basis, it turns red. So that's a Dow trend reversal, which means we just broke the higher high, higher low pattern that was going on since the 24th of January. So that is a first sign that possibly this market has turned from up to down. Now, when you actually go to a bar chart, sometimes so people are more used to using a bar or a candle chart. You might want to see a previous low break like this one, or this has broken intraday. And I actually want to see the budget day low, which is 20,658 break. And that's because it has certain Elliott wave angles to it as well. But right now what I'm trying to discuss is not the Elliott wave angle. So let us just, put a hide on this and we can go back to the line. Now, the next thing we want to know is what is happening on one of the sentiment indicators. And this one we actually run live, and it's known as the daily swing. The daily swing is interesting because it can give you very short-term 4 or 5 day reversals over sold readings, and therefore we pay attention to them. And so when it gets really down here, we expect that the market will bounce over the next couple of days, as it did here. So it got down to a 13 reading here on the 23rd of Jan, and yes, it has bounced from there. Now, what have we been seeing for the last few days, which is what I want to highlight, is that as this has been going higher, in fact I should say not from here, the last 3 tops, we actually have a negative divergence on the swing. On the last 3 tops, we actually making a lower high on the swing. Now, the swing is nothing but a diffusion indicator of whether the RMI is rising or falling across all F&O stocks. So if we see lower high, that simply means that fewer and fewer stocks are making a higher high, and in terms of momentum, not just price. So the momentum is actually not positive for all these stocks put together as we are making these higher highs. And that is a negative divergence that eventually plays into a reversal. So now we have a Dow trend reversal confirmed by a negative divergence in the swing. And that makes a very good case for maybe the trend is changing down. And the last thing, like I said, on a bar chart, I would wait for is 21,658. If that breaks, it would be a certainty that we are headed back to the previous lows from where we actually went up. And so that is essentially what we'll be watching out for tomorrow.